Okay, everybody, it's me, Gregory Mannarino. It is Monday, April 4th, 2022. I hope you had a great weekend, but we got to get back to work. Let's do that. Yesterday, I explained to you in my Markets A Look Ahead video that U.S. farmers are explaining that we are about to see much higher food prices. Well, there's something else playing right into that, people. Much higher energy prices. And I just want you to be ready for it. Two things are going to hit us very hard very soon. Again, much higher food prices, much higher energy prices. And this should really come as no surprise to any of you that follow this blog. What we're seeing here and this was a stunning admission right out of the mouth of Federal Reserve Chair thing, Jay Powell, that inflation is largely a monetary policy issue. Yes, and we still, like this morning, for example, you got commentators on Bloomberg and CNBC, and they're pointing their fingers at everything except what central banks are doing. Oh, it's Russia. Oh, it's this. And oh, it's that. No, bullshit. It's central banks who continue to inflate. When do you think a shred of truth is going to come out of the mainstream propaganda ministry? How about never? Their job is to distract you and to keep you off balance. Our politicians are playing the same game, and it's just a terrible thing to see. Anyway, with that aside, let's look at the market right now. Stock futures are slightly higher as I am doing this video blog. However, 10-year yield is lower, and you got the dollar, or the relative strength of the dollar, higher. Not much, but higher nonetheless. The setup for the market right now, trading doesn't start for about 35 minutes, is not great. However, we got crude oil higher again, over 3% across the board, and that trend is not going to stop either. So looking at the market just right now, it doesn't look like a fabulous day, but we'll see how it's going to play out here. I still believe that this market needs to fall a little bit here. We've gone straight up off of the lows. So it's only literally natural to see this market get back a little bit. And that's, in my opinion, an opportunity, because debt is not going to stop. If you realize that the driver of this entire thing is more debt, and we can expect much more debt to be pumped into this system, well, then everything's going to inflate. Everything is going to inflate on the back of a deflating dollar. You understand? I think you do. And it should be very obvious to you what you need to do. Anyway, let us move forward here. We got gold and silver right now this morning catching a bid. You got cryptocurrencies, doing okay. Bitcoin around 46,000. But the key to this thing, people, the key to this entire thing is the debt market. And I'm going to tell you again, ignore all the talk about yield curve inversions here, okay? It's astonishing to me to listen to the freaks on the mainstream channels pushing their fear narrative, yet again, another control mechanism of a recession. People, we're in a depression for the most part here, and it's about to get much, much worse with surging energy prices, surging food prices. I mean, people are really going to hit a breaking point at one time. I have no idea when that's going to be, and even if they do, it's not going to matter anyway. Central banks remain in full control of the situation. They are determined to continue to inflate. They are going out of their way to make sure that inflation continues to skyrocket across the board. I mean, we're talking about real estate prices. The Fed is still in here buying mortgage-backed securities. They're still in here artificially suppressing rates. It's not going to stop. They're flooding the world with dollars, and central banks around the world flooding the world with fiat currencies. They're going to prolong this war crisis and every other crisis you can think about so they can continue to throw cash at it. And what is that going to do? The more cash that they throw at anything, okay, well, the worse off the currencies are. The faster they crater. I told you, and I've been telling you for years, central banks are in a race to the bottom. A race to the bottom. They're going to continue to dilute their currencies in an effort to create inflation. But they're going to tell you out of the other side of their mouth, oh, we're going to fight inflation. We are determined to do something about it. Really? I mean, look at what the Fed is doing. We heard how concerned they are. They're going to really do something about inflation. And what do? They raise the federal funds rate 0.25%. And it's just a joke. And you know who the joke is on? The joke is on you, me, and the people of the world who are being strung along. We're being puppetized by, again, central banks who are the government. I think you all know that, but people, look. Understanding the mechanism yet again gives us enormous power. Enormous power. To realize that we should be taking the opposite side of this, okay? Let them continue to inflate because they're not going to stop. And that just makes what we need to do more clear. Again, that we need to be holding real things, hard assets, commodities, okay? Commodities are going to hyper balloon beyond your wildest dreams moving forward here, okay? I don't think people have even the slightest idea of what's going to happen here. Eventually, when we get this enormous amount of cash leaving certain aspects of this market, the debt market, leaving the stock market, and just, moving into commodities at one point, and I believe cryptocurrencies as well. That's the setup for me and you, okay? In the meantime, we take advantage of the market because it's a freak show, and it's going to continue to be propped up. It's going to continue to be propped up as long as the debt market remains where it is. Keep your eyes on that 10-year yield. Like I told you this morning, we came down a little bit. There is a slight safety trade going on right now. And a lot of this is speculation of possibly more sanctions against Russia. And what is that going to do? Raise the cost of living or the cost of living crisis for everyone. We're in a cost of living crisis, in case you don't know it, along with every other crisis that they want to throw at us. Crisis to crisis to crisis. All of this is simply a mechanism to continue to inflate. Do you understand? I think you do. I really hope you do. People have no idea at all of what's going on and why it's happening, that central banks are determined to inflate. And they're going to use every mechanism you can think about and things you can't even dream about to continue to do so, while at the same time telling people that they want to fight inflation. Oh, we're really going to do something this time. We're going to be raising rates. Great. It won't do a damn thing. So just count on it, people. I want you to be ready, again, for much higher prices across the board. Across the board. I mean, we already know, you and I, do your own research on this, over 6,000 products are made with crude oil. Okay, so energy prices are going to skyrocket. Crude oil is going way, way higher. So just get ready for that. Food prices, food shortages absolutely are coming. And there is going to be social unrest, yes, right here in the United States as well. Developed nations around the world. And what's going to happen? You're going to have puppet politicians pointing their fingers in every single direction. Okay, oh, it's the war. Oh, it's Russia. Oh, it's supply chain disruptions. No, it's central banks who are running it all, who are causing these things to occur that we are seeing. People, nothing is what it seems to be. And if you believe that what you're seeing is real, you have no idea what's going on. This is a freak show of the highest possible order. And you haven't seen a damn thing yet. All right, people, look, I'm out of here. Please share the video. I want to hear from you. Please comment here. And we'll sum this up later.